Hello and welcome to Gold and Silver Assets. It's Sunday the 5th of January 2020 and a very happy new year to all of you. So we've seen a very rapid rise in gold over the holiday period with particularly thin trading over that time, and this rise was due to some geopolitical events. So it's very easy to get excited because of such a big price rise, but it's important to take a step back before considering where we go from here. So let's start with the gold price in US dollars on the weekly scale. And I think that there's still every reason to remain bullish in the long term. So first of all, we remain in an uptrend since 2016. So we had the low over here in 2016, and each successive low has been higher and higher. So we are still in an uptrend. The other positive thing is that we've broken out from the 6-year-long basing process, and we remain over that breakout support line. So the big picture view is that I am still bullish. However, in the shorter term, I am very cautious about this move that we've just had. So there are a few reasons for this. The biggest reason is that if we look back to 2012, 2013, we had this area here, which was hit 1, 2, 3 times, and then finally on the 4th time it broke. So this is a very strong support and resistance area, and we're encountering that right now. And at the moment, there's no reason to believe that we would be able to break through this resistance very easily. So at the first attempt, of course, we got some rejection, and we're just about to go to our second attempt. Now this green candlestick bar does look very strong. There's not really much in the way of a wick there, which suggests that we might get a little bit more upwards movement to come. But I think this resistance here is going to be quite formidable. Remember, all of those people who would have bought in that area and sat through all these years will be very eager to sell to break even, and they'll be thoroughly fed up by now. So I think it's going to take more than a couple of attempts to break through that, but I think it will break through that eventually. I'm just a bit cautious about whether now is the time. Of course, if we have further geopolitical events, then yes, that could well break through up there. Let's have a closer look on the daily scale. Actually, before we do that, let's just reiterate some of the lines that I've drawn here. So this red line is the line that if we go below that, I think there's very little hope for gold, and I think would plunge to the depths of the 700-800s, but I think there's a very, very low chance of that happening. We've got the top of this base, which I think will provide very strong support indeed, and then we've got this shorter term upwards trend line. I've also connected these two highs over here to form this upper trend line here. Let's see if that holds on the daily scale. So here we have gold US dollars on the daily scale, and you can still see those same lines here. Now, one of the reasons why I'm cautious about further strong upwards movements is that on the RSI we are quite overbought. There is still room for further upwards movements, but it's limited. And I think there's two possibilities here. The chances of this rocketing up further and further are pretty low, I think, because of this extreme level on the RSI. However, what is more likely to happen is that we can get some upward movements, possibly up to this trend line here, which is at the 1576 US dollar level. Then the gold price could either consolidate around here before making its next move, and of course that will allow the RSI to cool off. Or the second possibility is that we get a very strong rejection of this level, and then we'd be looking for a very, very long red candlestick, which would initiate further downwards movements. Of course, we do have quite a few support levels down below. So one of them here is 1480, and at the most extreme, I'd look here at the 1360 level. It's difficult to know which of these two is the most likely to happen. I think if we see in the next week or so very subdued trading with small candlesticks, then I would be looking at this consolidation as being more likely. So we also had a question from one of our viewers about why the GDX has been stalling recently. So if you remember from the previous chart, the gold price had three very nice big green bars with strong upward movements. However, the last three bars on the GDX has actually been red, and as mentioned earlier, this is basically the price is stalling here. So there's a bit of a divergence there between what the miners are saying and what the gold price is saying, and that would fit with my thesis of either consolidation or downwards movements rather than blasting upwards through that overhead resistance. And just talking about the miners, if we look at the HUI gold ratio, what this basically tells us is that if we look at this chart, when the ratio goes down, then that means that the miners are outperforming to the downside, and that's something that they've been doing since all the way back to 2006. Any upwards movements tell us that the miners are outperforming gold to the upside. So if we look back to 2016, we saw a very strong overperformance compared to gold at that time. However, we've had some strong movements in gold since 2018 low here, but although there's been a little bit of outperformance, it's nothing like the 2016 price change, which again tells me that this upwards move is slightly subdued, more so than you would expect if we were in the full throes of a bull market. So I think we're still very early. We would need to see a strong movement in the miners to confirm the gold price movements before we can say, yes, we're in a fully fledged bull market. And finally, if we have a look at the silver price in US dollars on the daily scale, here we broke out from this descending wedge with price moving upwards, but the last three candles again have been slightly subdued. It hasn't moved up nearly as much as gold moved up, and actually we've got this pin bar candle here, which is potentially a bearish reversal sign, but it really depends if we see follow through in the next candle. And so by follow through, what I'm saying is that we would need price to close below the lower end of this candle, and to be sure we basically need to see a red candle like this, and that would indicate probably more of a correction before we move up again. So overall, longer term I am still bullish, but I'm just very cautious about this recent move, and so we'll have to see what happens in the coming week. Thanks for listening, and see you next week. Bye.